What is going on, everyone? I'm Crypto Walk, and I'm here to help you walk on your journey to financial freedom. So I've got some news for y'all. The Federal Reserve took down their interest rates by 0.5%, which is a massive drop compared to what the Federal Reserve usually likes to do. Depending on whether it goes up or down, they like to take it up by maybe 0.25%. If they're feeling progressive, they'll take it up by 0.5, and rarely they'll take it up by 0.75 or even 1%. Taking it down by 0.5% signals that they are ready to start printing money again. They already are, but go into quantitative easing, as they like to call it, which means there's going to be money everywhere. So in actuality, this rate drop is just the first of more that they're going to be doing this year, and I'm sure going into next year. Now, what does that mean? That means that money will be cheaper to borrow. And when people borrow money, they tend to invest it because people like to gamble. So of course, Bitcoin is going to get some of that, and you can already see that Bitcoin has moved up since that news. Bitcoin has been trading under 60,000 for a while now, and as you can see, it is back up to $63,000 a coin right now. But there's a lesson that I want you guys to take from this. So let's look at the monthly chart for Bitcoin. So you see where it started and you see where it is right now. That's not that much of a difference, 60K versus 63. But in between all of this, there are people that have lost a great deal or possibly all of their money. And that is because of leveraged trading. Now, what does that mean? X person makes a trade and they make 10%. Awesome. Wonderful. That would be an ideal trade for a lot of people. But let's say you feel like you're really good at this trading thing, so you want to increase the amount of rewards you get from doing a good trade without putting in more money. That's where leverage trading comes into play. You can increase the rate at which you either short or long a certain thing, and if you make money, you make your intended amount times that leverage rate. So if it's 5x and it goes up 10%, you actually make 50%. But there's a caveat to that as well. As much as you can make, more often than not, you can lose that as well. If something goes down 10%, you've lost 50%. Some people use 20x leverage. So if Bitcoin were to move 5% one way or the other, as this has done, for example, you think Bitcoin is going to go up from this 60K point, and then it goes down 5% like it has. If you've got 20x leverage, you've lost your entire investment. I'm speaking from experience when I say that trading is not the way to go if you want to generate wealth. For a time, I was a trader, but the main trader in the house for years was my dad, who made a lot of money in the Forex industry and trading stocks before that. He was very, very good at it. He made like 100% a week at times. That's how good he was. But even him, with all the money he was making, would rather just hodl different cryptos that he believes in and watch them go up. And that allows him to have way more time to be relaxed, be a dad. So if he would rather hodl than trade, then I think it's in all of your best interests that you drop day trading from your portfolio. Or if you are interested in getting into it, whatever token you believe in, do your due diligence, do your own research, and then just hold it. All the greatest cryptos started small and got big. Bitcoin was worth less than a penny when it started out. Ethereum has went up a bunch. Binance has went up a bunch. Cardano, Ripple, as much as there's nothing to them, they started lower than what they are now. And that's the lesson I believe you should take from this. Just hodl, be still, and watch things rise. If you found the information in this video helpful, like and subscribe to my channel. I'm Crypto Walk. Peace out.